Hi, it's Mitch again. Today we're speaking to Peter Bolton, insurance broker extraordinaire. A great guy. Today we're hitting the intersection between insurance and property. Can't wait to get into it. Let's chat. Peter Bolton, welcome to Should Have Bought That. Thanks for coming on.
Thank you very much.
I don't think
Thank
I've
you,
ever
Mitch.
called you Peter Bolton, but Bolts.
That's
commonly
fine.
Referred to. So,
Yeah.
mate, thanks for your time. Mate, your expertise is insurance, and you have been for over 20 years. Correct me if I'm wrong. A lot of our audience is first-home buyers and people looking to get into the market as well. As a first-home buyer, it's something that we see that they don't have much knowledge about, or either when they should insure the property, or what type of insurance they should get. So when should first-home buyers engage someone like yourself?
They should get involved with the broker or look at the insurance pretty much after they've paid a deposit, because after they've paid a deposit, they've got some money on the line, and if the vendor selling this house decides that they're going to cancel the insurance and then there's a fire or there's squatters or whatever was to happen, there's no insurance. So they should take out their own insurance pretty much after they've signed the documentation.
Yeah, so it's not on settlement. It's as soon as you've signed the documentation and you paid a deposit.
That's what most lawyers will tell you. Now, the person who's, you buy your first home, you don't have a whole lot of dough.
Yeah.
And the easiest thing in the world to think is, well, if I don't actually own the house, why would I insure it until I actually own it and I've paid the money and I've got it? But if it was to catch a light and you've paid your deposit and the vendor's trying to save a couple of bucks and cancels his insurance, then it's left. You've got a blue on your hands.
It's in your hands. Have you seen that arise before? That's probably not a great question to ask. You haven't?
I haven't.
Okay.
Pleasingly.
Pleasingly, yeah. But I dare say there would be instances where that's.
I'm sure there has been and will be, but I haven't come across it, which is a good thing.
Yeah, good. One thing we receive a lot from first home buyers is like, oh, I'll just go online and grab an insurance policy, or like I don't need an insurance broker, etc. Are there any instances where people won't need an insurance broker? Like, is it beneficial for them to go online, or are those policies missing certain criteria?
The thing is, to an untrained eye, to someone who's buying their first house, and they usually aren't savvy because they're usually younger, they're not savvy on insurance, and they won't know the difference between a couple of different products that could be offered, be it accidental damage versus defined events. And I'm not going to explain it now and bore everybody, but most of your claims come from accidental damage, like you have a party and someone puts their fist through a wall and knocks a TV off the wall and things like that. Those sort of claims are accidental damage.
They're very common.
Very common. And that's where most of the claims come from. Many of the direct insurers will, as a default, serve up a defined events, which is just covering you for things that are defined, like it's for, water issues and different things like that, without having all these other things that you can't define because there's so many different options,
Right.
Someone driving into your roller door of your garage or whatever.
Yeah, interesting. So they're little niches that they don't necessarily leave out, but need more exploration.
The average idiot, and this would have been me for a very long time, wouldn't have known the difference between those things. And so to have a broker to be able to say, you should have this or that. Other problems that people may encounter would be, it asks you how much you're going to insure your property for. And they might say, well, I've just bought this house for 1.2 million or 600,000, whatever it might be, and they put that as their purchase price. But the majority of that's probably going to be the land, and you don't insure the land because nothing's going to happen to the land.
Yeah, exactly.
So it's really just the price of the house. Now, oftentimes we will pick that up and say, that you're saying what was your purchase price? And they say it was 1.2. Well, your house can't be 1.2. So they would, if you went through a direct insurer and you just told them that, they may help you, but sometimes these things don't get picked up.
Yeah.
So and you're spending good money
than what you need to.
Absolutely.
Yeah. And obviously being, nowadays with cost of living, etc., it can be quite an expense to, the first time buyer.
Yeah. The other thing, without me yapping too much, when you work through a broker, then we would handle the claim for the insured.
Good point.
And so it's a real hassle if you've had a car accident or something like that, and you have to handle it and go around and handle with the insurers to get your money out of them and manage the whole process. It's quite difficult.
Yeah,
it's quite difficult.
And no one wants to do that.
No, and an insurer's job is not to pay claims. That's how they make their money. So for that reason, it's handy to have someone who's a pro at it
Yeah.
and has a very large book, like a broker will have a very large book of houses insured with whoever the different insurer might be. And you've got a little bit of clout. Plus the claims professional working for that
Yeah.
brokerage
Yeah.
can handle it for you and knows what they're doing. Otherwise, you come in and you do it for your first time
Yeah.
and, it takes up your time. You have got that
It's stressful.
inexperience. It's stressful. Some of our insurance brokers will have good relationships with the underwriters inside an insurance company. And oftentimes that can help you get, they might escalate it when they otherwise wouldn't, or we can ring up and say, hey, can you help us on this and do whatever. We can sometimes negotiate some marginally better pricing. Whereas when you go online and you do something through the direct insurers, you really don't have that option. Different insurance companies, they have their claims departments, and one year they might pay their claims really well, and the next year they become disasters because people change or whatever. An insurance company is much bigger than a couple of people, but some companies insurers are known for having poor claims service, but it can change. It can change. We insured one of your clients very recently, and they got a quote from one of the direct insurers. And we beat that by 15 to 20% by going to the market and getting better coverage, and it was cheaper by 15 to 20%. It's a fair bit. So the ability at the moment of a first home buyer to go to all the direct insurers, and they might be the Budget Directs and the Amy's and the RACVs, etc. They can go to all those people, but they can't go to all the other insurers, and they might be like the Zurichs or the Blue Zebras or the whoever's, because they only deal with brokers.
Yep.
So that's where a broker has an advantage to be able to go to a lot wider source.
It's a great feeling for a customer, especially when you first someone on, and that's how the result they get.
Yep.
And I guess it shows the power of insurance brokers.
Yes, yeah, it does. It sort of opens up many, many more markets, and they don't pay any extra for it. At the end of the day, you want the coverage and you want to know what you're paying, and
they got a better coverage for less.
Yes.
Yeah, brilliant.
Yes.
Bolts, is there anything a home buyer can do to reduce their premium? Quite simple things.
Yes, there is, and that's
Perfect.
a good thing. And usually they aren't just to appease the insurer. There's actually nice day-to-day benefits of it. But if you want to insure your house, to have good security is important to keep potential theft and burglary out of the equation. So you might have a monitored alarm. Insurers love monitored alarms. You might have all your deadlocks on all your doors, not just a normal lock, but a deadlock.
Yep.
You'd have grates on windows. If you're in a more risky area, you might have grates, bars on your windows.
Security screen type
Security
stuff.
screens.
Yep.
All those sort of things they love. If you have a monitored alarm, that's kind of nice because oftentimes your smoke detectors will be linked into your alarm, and therefore you've got some fire security. So if the house was to start burning, it's going to alert the monitoring company, and they can make sure that they get fire brigade there and that sort of thing too, and minimise the risk.
Yeah.
If the house burns, only half the house burns, not the whole house, then the insurance company pays half, and these things will help reduce the premium.
Now, Bolts, a topic that's quite common and that arises is climate change, obviously, with the world technically heating up. When it comes to insurance, how much does that affect your ability to do your job? And then, for example, someone buys a home near the ocean or a body of water. How does that affect insurance?
It definitely does. It definitely does. And when you get into more cyclone prevalent areas and you get into Queensland, many properties become either more expensive or more difficult to insure. With the climate change, there's a greater prevalence of cyclones, bushfires, floods, the whole shebang. And as they're happening, not one in 100 years, they're happening multiple times in the 100 years, then there's more claims, and so that's pushing prices up. So that's how it's probably affecting what's going on at this point.
The common occurrence of these natural disasters. Yeah.
But when you're buying a house, someone should be aware that if you're going to buy on the edge of the water, and for instance the Brisbane River or something, which has had issues in the past where they've had so much of a so much of a huge flood, and it's flooded all the back streets back up through the drains and things. That they're more difficult or more expensive to insure. The other thing is with bushfires, we might have, and our climate's pretty up and down, that with some good years of rain and then it dries out, if you try and insure some ski lodges, again, it's not a first home buyer issue, but for the understanding the question you've asked, is it was very difficult for a long time to get any insurance up in the alpine areas because of bushfire. And just about worldwide, all the insurers said, we'll insure your lodge, your flat, your home, whatever it was in the snow fields, only for $250,000 cap. Now, there's a whole lot of them that were worth, many, many millions.
Yeah.
From 1 to 10 to 50 million type.
Yeah. So the bushfire, it's actually dried out and they're quite prone if something happens then.
Yep. And all the markets around the world got spooked by bushfires.
Did the bushfire actually happen?
They got close to Mount Buller. They came up the back of Mount Buller and got really close. Mount Buller's fairly well armed, but the chit-chat and, the people at Lloyd's in London wouldn't necessarily have seen all the different mountains and understand each individual risk because they're all different.
Bodies of water always, when you're buying like the Brisbane River or like a canal we set up in Queensland a lot, like around the Gold Coast, etc. How much more expensive are we talking on average? That's something hard to predict.
It's very hard because one is we don't set the prices, so everyone's on its own merits.
Yeah.
And we have to go to all the different insurers who'll, just throw a blanket across the whole market and find out A, who's interested, and B, what prices they come in at. And we can't control the pricing. And whilst we try as brokers to create a little bit of competitive tension to get the prices down as cheap as we possibly can for our client, your first home buyer, it's a bit hard to answer that question.
Yeah. Bolt's the future of insurance broking. You've got AI technology coming in. What are the new trends you'd say moving forward, or you're predicting to say?
Yes. I think that AI will impact broking to a degree in the future. It has to. But certainly for business and maybe for homes, people and first home buyers will still want to have a relationship with somebody. They want someone to handle their claims oftentimes. If they consider themselves quite smart and they can work their whole way through it, AI might help them there. And it may be the retail, and in retail insurance is talking about houses, cars, maybe travel and a few things like that. AI might sneak in and help that a huge amount, but you won't get advice. You're not going to get advice from that. It'll give you some solutions. So that will change, and I think that AI may impact that. But if you need advice and you're saying, well, how do I handle this or that, you won't get that sort of answer. Do I need defined events or accidental damage cover? AI is probably not going to give you an answer on that, whereas a broker can say, well, consider this, consider that. We get more claims in this area than that.
Good point.
It will change. It will change, but probably in the retail space, which, first home buyers will probably fall into.
Bolts, one question we asked on this show. It's called.
Here comes the tricky one.
It's called "Should Have Bought That." Are there any properties in your lifetime that you've thought you look back on that you may have missed out on, or you were thinking about buying but then didn't, and then you think, "Geez, I should have bought that." About 10 years later, is there any that comes to mind?
Absolutely yes. Absolutely yes.
You don't have to go into specifics, but even just general areas or something.
Yeah, I looked at and it was some time ago, and I was talking about this only this morning to my wife and said something was happening. An old house that we used to own has just come on the market again.
Yeah,
and I talked about, if things had been different, we had to look at this place that was going to be a money pit, and we could probably never have afforded to do it up properly.
Yeah.
But if we had have got the money somehow from somewhere, maybe through yourself, we could have done it up, and the place would be worth an absolute fortune. So it was one that got away, but I'm not so sure that we had the wherewithal to do it, because it was purely a matter of how much money we spent on it. But we still drive past it on occasion and think, oh my golly, that could have been us.
Yeah.
That could have been us.
Common.
So there are a few, because
That's
life throws up opportunities everywhere, and you're always looking.
It's a good point, because we do see people go down that path, and maybe it's a tricky one. It could be a really good thing, but then also if they can't get the funding, it turns into quite a disastrous sort of transaction.
Yeah.
But Bolts, thank you, mate. I know you shifted around your calendar, etc. So I appreciate that.
You're
It's
very welcome.
kind.
You're very welcome.
And thanks for coming on the podcast. It's been great.
Yes.
And look forward to catching up with you soon.
Yeah. And look, I'm happy to help you or your guys at any time. And, I'm accessible. So anyone who wants to find out more and just ask questions, etc., they can run me down via you.
Beautiful. Thanks, Bolts.
You're
Appreciate
welcome.
it.
See
Thank
you.
Thanks to Bolts for coming along. A great chat about what to insure your property for, when to insure your property, and then anything you should be aware of when you're looking for insurance. See you next time.